All right, in the interest of time, we are going to get started. Good afternoon, everyone, and welcome. Thank you for joining us today for our first Small Business Strong webinar of the year, Understanding and Telling the Story of Your Business Through Your Income Statement. My name is Amber Haskell, and I'm the Vice President and Executive Director of the Chamber Foundation. The Greater Boston Chamber of Commerce Foundation, the Chamber's nonprofit arm, expands economic opportunity by focusing on workforce and talent development and small business support. It invests in people and small businesses through programs like this that develop talent, cultivate future leaders, and promote inclusive growth. The Foundation's Small Business Strong initiative helps to connect small businesses across Massachusetts to local resources and provide information for small and micro businesses to grow and thrive. Before I introduce today's speaker, I just have a couple of housekeeping items. Firstly, this webinar is being recorded and you will be able to watch a recording on the Chamber's YouTube page shortly after the presentation. For those who are joining live, please submit your questions throughout the webinar using the Q&A feature on the right-hand side of the screen, or you can email your questions to economicinclusion@bostonchamber.com. We will answer as many questions as we can at the end of the presentation. Now, I'm pleased to introduce today's speaker, Doug Steinberg. After graduating from Brandeis University in 1986 as an English major, Doug joined Coopers and Lybrand and became both a CPA and audit manager of large corporations. Doug left Coopers in 1992 to go after his dream of owning a health club. After spending 4 years as a GM of a large health club, Doug became a small business owner and purchased his own health club using 23 credit cards and a big smile. We promise it's a great story. After 24 years of owning the club, Doug sold his business and used the knowledge he gained uh, to become a business advisor with Small Business Strong, or as we call it, SBS. Through SBS, Doug helped over 300 small businesses with grants, financing, operational assistance, and other challenges that keep entrepreneurs up at night. In 2022, Doug opened a pickleball school that has over 700 students. He has a wife who is a school nurse and two fully employed and rather nice kids who live in Boston and Providence. His hobbies include ocean kayak fishing, eating great food, and being a competitive pickleball player when not working and teaching as a pro. And with that, I will pass it over to Doug.
Thank you, Amber. I forgot I gave you that bio, so I was shocked at how much you knew about me. But the intention, usually when I do teach pickleball in clinics, I like to say what the intention of the clinic is. If there's like one thing you could walk away from, this is what you should walk away with. So I would say the intention of this clinic is to make sure that you understand the importance of the income statement. It tells the story of your past of your business. It tells a story of your present business, and it helps tell the story of the future of your business. In the end, it's not that hard to create, but it's incredibly important, and it helps to create a bridge between what your business is trying to tell you and your ability to be able to share that story with, as I'll get into, a number of different parties that are interested or that could be interested, including your staff, banks. So it empowers you to be able to tell the story of your business the way you should. Now, the way I kind of want this webinar was it was born out of the fact that of all these businesses that I was helping, a lot of the times I would start the conversation just by saying, what's keeping you up at night? And then I'd usually follow up with, how are you doing? Tell me about your financial condition. And so many times I would get answers like, I think I'm doing well, or, my bank account showing that I have more money than I did last month, so I must be doing okay. And it was very clear to me that most of the business owners I talked to were very proficient and experts in the products that they were selling, or the business's main revenue streams. They were experts in that. But when it came to the business itself, a majority of the owners really didn't, in the end, know that much about their own financial condition. So I just saw this gaping hole that really needs to be filled. And so if you're just starting out, if you're just in the idea phase of your business, or if you're a micro business and you're getting going and you're working, 17, 18 hours a day on the front end of you're dealing with your customers, and you feel like you don't have time to get to the financial condition of your business, understand that if you don't get to it, you better hire somebody who does, because you can run a great business, but unless you understand how the financial condition is, you really don't know how your business is doing. So I'm gonna kind of imprint that right off the bat, and that we can get into now the basics of how to build it, how to read it and stuff. So basically, I start with to grow your business, you need to know your business. So like I said, many business owners out there know their products very well. So a restaurant owner could have started the restaurant because they cooked, they wanted to start a pancake place because they got a fantastic pancake recipe, and people start coming in right away. They start making revenue, and they're focused completely on the product and the staff. And there's really, as far as the revenue coming in and the expenses going out, there's no real knowledge of it. They're just kind of running by the seat of their pants on, this month we saw a bunch of deposits come in, and we paid what we thought we needed to pay. The bill came in, we paid it, but it's kind of like living in the moment. And one of the side notes of that is, when you're living in the moment as a business person, my guess is most people who do that don't get a lot of sleep, because you're worried about stuff that you should be worried about, but you're not sure what it is. So again, the ability to have this income statement, be able to analyze your business through your numbers, it takes all the surprises out of what's going on and really empowers you to be able to manage your business. So I kind of, I want to give you, is this you kind of thing. When a bank asks you for your numbers, and this is, if you go and apply for, you want to get a loan, do you say my accountant has those? And then you kind of hope your accountant does. If asked about a budget or projections for your business plan, do you say you haven't gotten to that yet? Deep down, you probably never will, or that you don't know how. Do you determine how your business is doing by checking your ending bank balance? And I have to tell you, I'd say the majority of the businesses that I deal with, especially businesses like in the under $400,000 a year range, really gauge how they're doing by their ending bank balance every month. And they get happy if they see that the bank balance has gone up, and they get upset if it's gone down. Not the way to run your business. Is your idea of a bookkeeper a shoebox of documents to give to your accountant? So we're going to get into, how you can, the different levels of having a bookkeeper. But you don't want to be in a position where every time anything is brought up about your financial condition or your numbers, that your default is, you need to talk to my accountant. Your accountant is a good ally for you, but is not your financial analyst. And then my final bullet on that is, how are you sleeping since starting the business? Everybody worries about growing their business through revenue. And deep down, I think a lot of people don't get any sleep because they just don't know how their business is doing. If any of those bullets apply, just kind of a heads up. And so what is the income statement? To keep it really simple, the income statement is just your revenues that you bring in minus your expenses that you pay for to keep your business going, and that equals your profit. And basically your profit, in a back-ended way, if you're a sole owner of your business, your profit is your salary, is what you could technically, if you wanted to bring your balance to zero every year. If you bring in $100,000 and your expenses are $50,000, then technically you made $50,000 this year. So without the ability to have that income statement and create it and have it, it's just a guess as to what you made. And so as a result of being the sole owner, if somebody said, you know, how much did you make last year? And you don't know, technically you don't know how much you made for yourself. So again, I'm throwing this hard out at you, income statement wise, to really empower you to be able to give yourself the tools that you need so that you have this information and simple stuff like knowing how much you made. Also, by creating the income statement and, you know, kind of your first year, and I'm going to show you how to create it. But what it does is once you accumulate last year, this year, and you get a few years in a row, you're able to compare the past to the present, and then you're able to actually create a very accurate future. Which again, I keep harping back to sleeping at night, but if you have a good income statement that has 2 or 3 years of good numbers, you're able to really create a budget then for future years that you just sit each month and you look to see if you're meeting it. As long as you're meeting it, you know that you're going to make X and you're going to be able to provide for your family and yourself. So that is how the income statement works. I'm going to quickly flip over to a example income statement and kind of show you how you go about analyzing it for a second. So this is just a general restaurant income statement. Let me just, whoops. That second. All right, you should be able to see this. So if you look down the left side, I'm describing the top category is revenue. This is just a general revenue category for a restaurant. I'm going to talk a little bit later about how when you build your income statement, you want to build it so that it helps you. And in this case, you know, just saying revenue really isn't enough detail to be able to help you make decisions on what are your revenue streams, which are doing well, which are not doing well. But for the purpose of, you know, simplicity here, I've just got revenue. And then your cost of goods sold for a restaurant, for example, is all the products that they need to buy to make the food, which then brings you to your gross profit. And so, you know, a restaurant in this case that brings in 1.5 million, the cost of the product is 450,000, so their gross profit is $1,050,000. And then below that is all the operating expenses that then bring you down to your operating and net income. So in this case, I broke it out into salaries and wages, rent, utilities, marketing, insurance. And then, you know, it goes all the way down. Basically, it becomes your revenue minus your expenses equals your net income in the end. Now, you can see that this company, if we go back up to the top, the prior year grossed 1.4 million, and the current year the grossed 1.5 million. So you say, hey, that's good growth of 100,000 or 7%. Now, one of the empowering things about an income statement is you go down to the bottom, and while they increased revenue by $100,000, the net income actually went down. And so you'd say, well, how's that possible? If I increased revenue by 100,000, how could my net income go down? And so then you start looking at your expenses. And if you look in here, salaries and wages went up 2.9%. You look at the percentages here on the right, you're going to want to zone in on something that seems out of whack. And in this case, the marketing went from $50,000 to $100,000 in a year. Now I want to use this example of marketing because I had a business owner that decided to hire a quote marketing person to design their website the year after they opened, and weren't really keeping track of their expenses, really their revenue either. But the business was overall profiting, but they ended up hiring a website designer who was charging them $3,500 a month to do their website and manage it on a monthly basis. Just to give you a quick ditty on that. You should be able to get a good website designer to manage your website for $200 to $500 a month at most, and build a good one for under $5,000. In this case, this person was spending boatloads of money to this website designer. In fact, the website designer in that second year was making more than the owner was making. So by having this income statement, and if you're looking at it on a monthly basis instead of this is an annual basis, you're going to quickly see expenses that stick out and revenue that sticks out that allows you to then make decisions on your business quickly, efficiently, and accurately, rather than waiting till the end of the year, having your accountant create a tax return, probably not even be able to understand that, because tax returns are much harder to understand than an income statement itself is. And really have no ability or tool to be able to analyze your business. I kind of use the analogy when it comes to a good sports analogy is, if you'll notice now when there's an NFL game going on, the plays are done, and then immediately the quarterback huddles with the coach on the sideline and looks at the video. To me, the income statement is like looking at video. You're playing the game. In other words, the sports analogy here is when you're during the day running your business, you're playing the game. And if you are unable to go home and look at the video at night, and you aren't able to reflect accurately using numbers on what's going on, you're really unable to analyze your business. So if you took, like, for example, all the video away from the sidelines with these football players, they kind of just have to stand on the sidelines and kind of talk stuff over, which really isn't very accurate, an accurate way to do it. So in this case, clearly, I'm looking at this income statement and I'm saying, okay, now that I see I've doubled my marketing, I'm going to look into whether I believe that was a worthy expense to increase that much, because clearly I have raised my revenue, but is that due to the marketing or something else? And is it worth paying this amount of money based on what I'm making? All right, so that's kind of an example of how to use the income statement.
Hey,
So
Doug, can we ask a quick question?
Oh, yep.
So based on what you just said, right, like the analogy with looking at the plays, right, on the sidelines or watching the video, how often should business owners be going over their income statement? Should that be monthly, quarterly,
Yep.
yearly? How
So
often?
ideally, you want to do it monthly. If you've got a bookkeeper in house, and I'll get to that of how the income statement's created. I used to look at my income statement weekly. But if you can do it monthly, you're putting yourself in a position to make really good real-time decisions. Quarterly is okay, but for a small business, you can't really wait 3 months to determine whether you're doing something right or wrong, especially if you're a micro business and you're first starting out. You want to be I personally would be looking at my income statement weekly, but part of that is you have to accumulate the numbers to be able to do it. And as you'll see a little as we go along here, you're going to probably build your income statement through bank statements and credit card statements, and you only get those monthly. So at a minimum monthly. Most people wait till annually, and even then aren't doing it. So I would shoot for monthly. Does that help that? Okay, so when you are after or in creating your income statement, who cares? And so there's four audiences that you're creating this for. The first and most important one is you and any partners that you have. I've gone over how important it is to be able to analyze, et cetera, et cetera. It's going to help you with the real-time decisions of your business. Kind of jumping to the bank, when you start to need debt, or when you want to scale your business and expand it, and if you do need debt, you're going to need to speak the bank's language or an investor's language, and that is simply an income statement, which then can be busted into a business plan with projections. But it all starts with that. And let me tell you, from the standpoint of a bank, if you walked in and you weren't able to talk about your numbers, the bank's just not going to take you seriously. When you introduced me with the 24 credit cards that I purchased in my business, I actually spent a lot of time because I was an English major, and that's why I chose to become an accountant to start, is because I saw that that's a great way to be able to talk business. And I ended up buying my first business that cost $1 million. I had $5,000 to my name at the time. The rest was credit cards and mainly bank debt. In order to get that bank debt, I needed to be able to give a strong business projection on the business that I was purchasing. And being able to do that when you're sitting in the room and you're able to go over your income statement, either currently, I was able to show the business that I bought their income statement to the bank, and then created business projections for the future. Being able to do that with a bank, it's very hard for them not to take you seriously. And you'll see that. And as far as learning this stuff, as we go along here in these next couple of slides, it's not that hard to do. In this day and age with the way software works, you don't have to become an accountant to understand accounting. And the result of accounting is your income statement, your balance sheet. You don't have to understand how to do it anymore. It just basically gets pumped out, and then you just have to understand how to analyze it. So the other couple of populations that are really important are, one, your staff. So if you want to incentivize your staff, especially your sales staff, to meet X markers so that they can make more money, with your income statement, you can say to your staff, if you bring in this $100,000, I'm going to be able to pay you an extra $10,000 bonus. You can't really do any of that without having an income statement in front of you, and be able to project, if I ask my staff to bring in $100,000, how does that impact if I pay them $10,000? How does that impact my bottom line? So again, it gives you that ability to make some really good business decisions, and your staff will get if your staff gets involved with your numbers, and gets excited by your numbers, then you got them really working for you, because ultimately that net income number is what you're making, and really in the end, these are for-profit businesses, so the ultimate goal of all of you is to make money. And then the final one is the vendors. If you're able to give them an income statement of how you're doing, you can push your terms on, especially if you're in manufacturing, or if you're a restaurant, you have a large cost of goods sold, you have a large product cost. Your ability to push terms out with your vendors so that you don't have to pay them for 60 or 90 or 120 days can really help you, especially if you're a seasonal business. And in order to do that, you need to be able to show them your numbers so that they have comfort to be able to say, I can rely on this person to pay 90, 60, 90, 100 days out, 120 days out. Can't even begin to have that conversation without it. So now I'm going to get quickly into how to build the income statement from scratch. And the quick tips that will make this really easy. First of all, you need to separate in your business, whether you're a sole proprietor, an LLC, or you've elected to be a full corporation, S Corp, C Corp. In the sole proprietor and single owner LLC world, which most of you are going to be, the tendency is to intermingle your personal and your business. From the standpoint of being able to analyze your business, if you've got personal expenses, and if you've got say a checking account, and you're doing both your personal and business activity out of that, it's impossible to figure out how your business is doing. So you want to, if you're once you open the business, you want to have a business account and have it completely separated from your personal account. Right off the bat, I'm going to tell you I try to recommend one of everything. So if you could just have one checking account, that would be good. The reason why I say this is, as we'll just get into the next bullet, and then I'll come back to that. If you use, for example, QuickBooks, which is an excellent, easy form of accounting, and it costs around $39 a month. When you're uploading your information from your bank accounts and from your credit card accounts to create the income statement, to create your revenue in and your expenses out, the less accounts that you have, the easier this is. So the way, for example, QuickBooks works is at the end of each month, you'll connect your business account, your business checking account, and your credit card to QuickBooks, and you'll upload the activity. Then in QuickBooks, it's going to give you a list of every single transaction that you just uploaded, and all you have to do is just allocate it to a specific account. So if it's deposits from your checking account and you want to have, for example, 5 revenue streams, you're going to look at each deposit and say, okay, this, if you think in terms of it being let's say it's a health club, some of it's membership revenue, some of it's personal training revenue. You're going to build your revenue categories so that they help you define and help you make decisions and help you define what your total revenue is. And so the checking account, those transactions will be uploaded, and all you have to do is just allocate them into one of probably 4 or 5 revenue accounts. On the expense side, when you get your credit card statement, same thing. It gets uploaded, and then let's say you're paying your lawyer $200 a month out of your credit card. You're going to put that under legal fees. Let's say you're paying $10,000 a month for going to a restaurant, example, $10,000 a month for the cost of the food that you have to create. You're going to put that under cost of goods sold. And then what happens is once you allocate all those revenue and expense transactions out, the QuickBooks will spit out an income statement for you. And all of a sudden now you have that statement I just showed you before. And now you are actually looking at your business through your numbers and being able to make the decisions off of them. This is a lot different than it was like 20 years ago, where you really did have to understand accounting and there were debits and credits and you had to do a lot of stuff. You really had to hire a bookkeeper to do all this. Now, QuickBooks, as an example, does it all for you. If you still feel a little queasy about kind of starting this on your own, the $39 a month, I think, is really just you doing it yourself. But you can actually pay a little more and they'll help you do it. So, that's a little safety net for you. So, kind of going to the next bullet, I've already covered this. You want to create a list of revenue and expenses that work for you. So again, when QuickBooks offers you their revenues and expenses, they're going to offer you kind of a generic list, and you can literally change the definitions of them. You need to what fits you. And every business is different, but just make sure that when this income statement gets spit out, that it makes sense for you, that you're not seeing, food revenue under a company that is a health club, something like that. You need to create the definitions so that it works for you. As far as bookkeeping is concerned, you can buy it or do it yourself. So, right off the bat, it's not a bad idea to try I keep going back to QuickBooks because it's a good one, but it's not a bad idea to try it yourself. If it's just not something that you want to do or can do because your brain doesn't work that way, you can hire a bookkeeper to do it for you, and then they'll just spit the income statement to you at the end of each month for you to analyze. Again, it's not a bad idea for you to try it at first, because I am of the opinion that everything related to your business, you should do it first yourself. And then, as I said to an owner yesterday, I like to do it myself first, become an expert, and then surround myself with brilliance and go on vacation. That's the goal here. Quick ditty there. Make sure that your front of house software, for example, Toast or Square, or if you're in a more specific industry and you've got a specific software, make sure it's compatible with the accounting software you use, because you don't want to be collecting all these revenue amounts and then find out that it's not compatible with your accounting software. It forces you to have to manually put these amounts in rather than upload them. So that's important. Good news is most of front of house software is compatible with QuickBooks, but make sure, or whatever accounting software you use, but make sure that is the case. Continuing on that vein of keeping it simple, have one credit card, don't have six. If you max out on that one, or you maxing out every month on that one, a couple things on that. One is obviously you may need to get a second one, but if you're maxing out every month on your credit card and not paying it back, you want to quickly try to look into getting a line of credit with a bank, because if you're just using credit cards, you're most likely dealing with some high interest rates, and you may have to do that to begin with. But you know, from a sound business perspective, you don't want to be doing that for a long period of time. And finally, you know, that gets back to the question that was just asked. If you can upload this stuff daily or weekly, it gives you the ability to look at your numbers more often. At most, you should be uploading them monthly. And I just throw in that don't procrastinate, because if you keep putting it off, it just becomes harder and harder to do.
Doug, we actually have a bookkeeper who's attending. If anyone is interested in a bookkeeper, the business is called LPA Bookkeeping Solutions, and their email is Lorena, Lorena, at lpabookkeepingsolutions.com. So if
Great.
anyone is interested.
Great, awesome. All right. So in the end, and I've covered a bunch of these already, but what does the income statement do for you? First of all, it just gives you good insight. It allows you to see what your revenue and expenses are broken into categories that make sense for your business. So when I say, how you doing? You can actually say to me, well, you know, my memberships, I'm using my health club example, my memberships were up this month, my training was down, and I can tell you why. And that's just awesome to be able to do that. It empowers you so much, and you're going to sleep and you're going to be able to make good decisions. It gives you accurate and real-time insight into whether your business is profitable or losing money. And I use the example of gift cards here. I used to do some bookkeeping on the side when I owned my health club, and I had a spa. Spas tend to do a tremendous amount of revenue around Christmas time. And so you're bringing in all this revenue in December, but what you're forgetting then is that then in January, February, and March, all that revenue you brought in December now becomes zero revenue for the next 2 or 3 months while all the expenses catch up. And so being able to see and categorize, if I'm a spa, I'm definitely having a gift card area. And if I see that 80% of my gift card revenue in December, 80% of my revenue in December is gift card revenue, I have to buckle up and realize that in January and February and March, I got some big time expenses coming with no revenue. And so that gives you the ability, again, to make some good decisions and not, I've seen, including that spa for the year before that I did their bookkeeping, they almost drove themselves into the ground because the person went out and bought a new car in December, thinking that they were, you know, doing fantastic, and forgot about the fact that then the next couple months they were going to have all these treatments they were going to have with no additional revenue coming in. So in doing so, it also gives you the ability to focus on making impactful decisions to your bottom line. And I give that website designer example that I said prior to that. That woman, if she hadn't gotten some, if we hadn't had our phone call, she was about 16 months into this. And in one phone call, after talking to her, she literally called her designer up and fired them. You know, as a relatively new business owner, she didn't really look into how much a designer should cost. It was actually a quote friend. And at least it was a friend. And, you know, I basically became her income statement analyzer. And when it was brought to her attention, just the discrepancy between what she was making and her designer was making, and then what was the designer doing for her. Oftentimes people, once they start paying an expense, they just think it becomes an expense, not something you can really impact. And you should be able to, through your income statement, you should be looking at your expenses on a monthly basis and saying, are these expenses A, worth it? B, can I bring them down? And a quick example on that is everybody starts with insurance costs with their insurance, you know, they have an initial insurance expense. After your first year and you've done a good job of running your business, you should shop your insurance expense out and see if you can get the same deductibles and the same coverage for a lot less money. I personally did that in my business, and I halved the amount of insurance expense that I had when I did this while getting the same coverage. So most business owners focus thoroughly on their revenue side of their business to grow their company. When you have your income statement and are able to analyze your expenses, you're able to realize that the net income can be impacted greatly by revenue growth and expense reduction. So as much as you can beat your head against the wall trying to grow your revenue, you can equally impact your bottom line by spending that time figuring out whether the expenses you're paying out are delivering for you. Really, really fantastic benefit of having a solid income statement. And then after, you know, that's just the good insight side. And say once you get good at this, and I say now you're talking, you can now create a budget. You get done with your first year, now you can create a budget and have the ability to predict an accurate future and make it come true. So, you know, you take your current numbers that you've done in the past year, you did $500,000 in revenue, and you look at it and you say, you know, I think based on how I did, I could grow this by 15%. And so you're creating a budget that way. Now you look at your expenses and you say, okay, I spent $20,000 on legal last year, but most of that was related to starting my business. So I think this year I can spend $1,000 on legal at most. And you get done with that budget and you go, and this is what I expect to make. And then on a monthly basis, you just try to, you go and you see what your actuals are against your budget. And man, it allows you to sleep at night. And then finally, with accurate numbers comes solid business projections, and you're able to speak when you go out for debt or you're looking for investors, you're able to speak their language. And again, I say that's how I got my loan. So the income statement, there's a few different accounting reports that you can have. The income statement is, you know, revenue minus expenses equals profit. The balance sheet is your assets and your liabilities. Your statement of cash flow is another way of looking at your cash in and your cash out. But the one other, outside of the income statement being generated on a monthly basis, the one other report that I would implore you to do on a monthly basis is a bank reconciliation. And the bank reconciliation is basically that you should learn how to do this, and then if you get a bookkeeper, you can have the bookkeeper do it for you. But it's basically you take your last month's ending bank balance, and then you're gonna add the cash in that came in, and this is a simplified version, but it's not that complex. You know, you're gonna add the cash in, subtract the cash out using the transactions that are actually uploaded versus what you think came in and came out, and you're going to come up with an ending bank balance that should match your actual bank balance. The two reasons why you should do this are, one, because if you're not paying attention to on the revenue side, if you're not paying attention to exactly what you're seeing coming in, as you start to get staff, there's the ability, if you have a bookkeeper, if you have an in-house person who's dealing with the cash for you, there is a possibility of theft. Over the course of 24 years of owning my business, I had one bookkeeper who stole from me for a year. Unfortunately, she ended up getting convicted and was a felon. And I caught it at the end of the first year. She was manipulating these memberships, the revenue coming in on the memberships. People get really smart when they want to for stealing. And then I also had personal trainers, two different personal trainers who were kind of screwing around and double dipping. And I caught this stuff through doing my bank reconciliation. A second really important reason why you should do it is because virtually everything now from an expense standpoint is automatically withdrawn out of your out of your account. So you don't cut checks that often anymore. It's just you set up for automatic withdrawal. Well, I was doing the bookkeeping for that another spa, and ADP one month erroneously took her payroll out twice, the same payroll out twice. So there was a $15,000 extra deduction taken out. And because she really never looked at her numbers, by the end of the year, that $15,000 was kind of absorbed into all the rest of her expenses, and she didn't even notice it. And so that was $15,000 that she just would have flushed down the toilet if the reconciliation wasn't done. I ended up catching up all of her stuff and caught it for her, and she ended up getting the money back. So those are two really important reasons why. The support team, to give you a good income statement, and to obviously help run your business is the book. Shout out to that bookkeeper out there. Your staff, the vendors, your bank, a good accountant, a good lawyer, and insurance agent. I'm actually jumping a little past the income statement here, as these last two slides are really kind of just extra tips for you. So this is kind of like more of just general business stuff, that when you're creating your team, these are the really important groups to focus in on. People don't often think of their accountant or their lawyer or their insurance agent as part of the team, but those are three typically large expenses you make in any given moment, and you want those people working for you and understanding your business. Same thing with the bank. The bank, especially after they lend to you, is invested in you, and you want them working with you and understanding where your business is, so that when it comes next time to scale up your business more, it's not a surprise to them, and they're actually chomping at the bit to give you money. So those are groups to really think about. People usually, when they do their business, just think about their staff as the key members, but it really is much more than that. This is my final slide, and kind of other quick tips I want to throw out at you that I think are really important as a small business. A couple of them I've already touched on. You should know your business better than anyone. And it falls back to first knowing your numbers, which again falls back to the income statements. But the benefits of knowing your business better than anyone include training. You're able to train your staff the way you want them to run the business, versus if you don't know all or most aspects of your business, you're going to have to rely on somebody who may not be doing it the way you'd like it. So get to know everything about your business once, and then start ferreting it out to people, so that you can do larger things to help your business grow. Expense control. If you understand, and I was talking to an owner yesterday, potentially opening a cafe. We were talking about kind of important assets in the cafe. One of them included the coffee maker. It's great to have a good vendor for that coffee maker in case it breaks, so that you can get it up and running quickly. But if I'm running a cafe, I actually want to know how to fix it myself, so that I could get it up and running right away. And there's going to be different parts of your business that you can't afford to have down that long, or you don't want to sit there and every time something breaks, get that massive bill that you probably could cut down to 10% of the cost if you could do it yourself. And then again, after you do it yourself once, you don't want to be in the minutia of fixing stuff in your business on a constant basis once you're starting to grow. So then you teach somebody else how to do it in your business, and now you're rolling. Another thing to really pay close attention to, obviously, is customer satisfaction. Try to figure out ways to get good feedback from your customers, and understand that while you're going to try to meet most of people's complaints or suggestions, you still know your business better than anyone, and it's just as smart and strong to be able to tell a customer why you're not going to do something, but that you appreciate their suggestion, rather than just trying to do everything every customer asks. That's not customer satisfaction. That's your customers running your business. And finally, as a small business entrepreneur, don't ever take no as an answer. No to me is always maybe. And, really focus on your business better than anyone. Try to find those creative ideas and solutions that will help no turn into yes. As far as the legal side, things like leases especially, any vendor contracts, read what you sign all the way through and understand it. I can't tell you how many owners that I've spoken to that have signed leases that never really looked at them. And your lease, if you don't own the company, your lease is your lifeline in being able to continue your business. So I can that's its whole own topic, but can't tell you how many businesses built up their businesses, were leasing a space and then got booted out of the space. You don't want to ever be in a position for that to happen. So, create a lease and always read what you're signing, bank documents as well. And finally, develop and master being creative, being resilient, being flexible. Learn how to take educated risks, because as an entrepreneur, you are a risk taker. Just learn how to make them, take an educated one than just a blind one, but get comfortable taking risks. And obviously, as the leader of your business, develop and hone your leadership skills. Very important. Just as a side, I do consulting for small businesses, and this is my information. I think you might be able to get it off a post email as well, but and you're able to see these slides. But that's my information, and that's pretty much it. So open it up for questions.
Thank you, Doug.
Whoop.
In the
I'm not
meantime,
hearing
Doug,
you.
I do have a few questions for you that I've written down.
Yep.
So first is the use of AI. I know a lot of business owners are using tools like ChatGPT, to create marketing materials or, presentations. Is there a role in AI that could help business owners with their income statements?
That's an interesting question. I don't really think so. I'm trying to think of how that would work, but no, I mean, in a way, if the QuickBooks like software has created, it kind of has an AI built in that, like I had said, like 15, 20 years ago, you had to have a bookkeeper to create it. Now, something like if you have a QuickBooks set up, it's actually acting as a certain amount of AI to run your accounting. But as far as, analyzing your income statement and stuff like that, not really. I don't think AI is really, no, I don't think so.
Perfect. Question on the projections and growth side of, using your income statement for that. You touched on it a little bit. The first is being on, if you are starting a business, from scratch, ground up, you don't really have income yet, right? Or everything's kind of projections. How can you get the best possible projections, right?
Yep.
So for example, right, I'm a baker. I make bagels. I've never really sold my bagels yet. I just know I have a good product.
Yep.
How can I create some of those projections to either take to the bank or
Yep.
for myself to know
Yep.
how to keep my costs in line?
Yep. So it's a great question. I mean, one thing you do have when you're about to start your business, you no doubt have expenses, and you should be able to be very accurate in what those expenses are outside of the cost of goods sold, because the cost of goods sold is a variable expense based on how much you sell. But everything below that cost of goods sold, your marketing, your legal, your accounting, all that stuff is fixed, and you should know those numbers before you even open your business. As far as creating the projections, what you want to do so that you don't overwhelm yourself is if we use kind of an Excel spreadsheet as an example, you want to start with, okay, I'm going to go Sunday through Saturday on 1 week of my business. And I'm going to say, okay, if I make bagels, how many bagels realistically am I going to sell in a day? How much am I going to charge for those bagels? And then as a result, to keep this really simple, my bagel price times how many I'm going to sell that day is how much my revenue is going to be. Now I'm going to look at that Sunday. I'm going to look at Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Is there any difference or not? If there isn't, then I can just say a weekly, I can just use that projection to the 1st to the 7th day. Now, the second thing is it a seasonal business? So am I going to sell a lot more bagels in the summer than in the winter? So what you got to do is you have to look at your business first as the day to create the projection. Look at a day to keep it really simple and say, okay, how much am I going to sell? Look at the week and see if there's any, in essence, seasonality in the week. And then look at the year and see if there's any major changes in the year. And a great example is like with health clubs, you're going to sell a lot more memberships in January than you are in July. So if you are showing a bank that you're going to sell 100 memberships in January and another 100 memberships in July, you're not accurately creating a projection. So if you can learn, if you can learn Excel enough, Excel is just an example of something you can use, but you have to put this down. If you can put it down into software, it'll add the stuff up for you. You could actually do this manually, but that is the way to create it. So try not to get overwhelmed with, God, how do I create a year's worth of revenue based on not having sold anything yet? And you need to be able to do this, because if you can't accurately project out your first year before starting your business, you're really flying by the seat of your pants. So once you start doing this iteration, you're going to quickly see, wow, and be reasonable with yourself, by the way. Don't be too overly optimistic. You're going to get done with a year's worth of projections and you're going to say, wow, this makes sense.
We all know the phrase, right? You gotta, it takes money to make money.
Yeah.
But what we've also seen right through your presentation and the income statement is how to use it for decision making. So at what point do you say, okay, if we go to like a marketing example, right? Like, hey, I know I need to invest in marketing to take my business to that next level.
Mm-hmm.
What should you be looking for when making that decision? So that you're spending your money wisely, as
Right.
opposed to, kind of throwing money in the air and hoping that you get a benefit from it.
Yep. So a couple things out of that. One is, whatever you end up agreeing to pay your vendor, you want to make sure you get in writing what you're going to get back. And some of the most notoriously money, I don't want to use the word money sucking, but I mean, not in a, some of the vendors that are very difficult to gauge how much you're going to end up spending, and then what result are you going to get out of it positively, are lawyers, accountants. You want to be able to find out what you're getting in the first go round. So for example, with a lawyer, if they say they can help set up your LLC, or they can help do this, and they can help you with insurance, or they can help you with that, you want to get this in writing, and then there is a certain amount of gut that you have to go on in the first year of, okay, I'm able to spend this, and this is going to bring me X value. In the first year, it's going to be harder to analyze that, because you are doing these things for the first time. But ultimately, that's where the whole analyzing your income statement on a monthly basis kicks in. Is you shouldn't be spending anything large in any given month outside of capital expenditures. And if you're seeing monthly that you're definitely spending on something and not getting a resulting bang in your revenue from it, by analyzing this monthly, you're gonna see what you can get rid of. By waiting till the end of the year, it's kind of a little bit like that spa that literally that mistake absorbed into their expenses to the point where they didn't even notice it. She knew she didn't make very much money that year, but she had no idea why. Does that answer the question?
No, I think that does. The importance of, making sure you know what you're getting for the value of that money, and then
Yep.
based on your income statement, do you have that money to spend?
Yeah, yeah. And when you build your expense side, when I used to do workshops and speak at conferences for Health Club, I've spent a lot more time on expense control than I spent on revenue growth. And if you looked at the conference schedule, I'd say like 90% of the conference stuff was based on revenue growth. That is a very unknown and kind of sometimes dice rolling setup. You usually also have to spend money to even get that new revenue growth. Whereas expenses, if you're looking at them and you're saying, okay, I can pare this down, whether I get a new vendor and they charge me less, or do I need this? You have much more control over your expenses than you do over this future revenue. So you should be focused on both all the time.
Wonderful. And I also want to take this moment because we're talking about, potentially paying for a lawyer or, an accountant or a bookkeeper. Small Business Strong has a program called First Call that is for any business in Massachusetts. Doug is an advisor for us as part of our First Call program, and we are here to help you navigate all of this, as well as help connect you to free resources in your local area to help with some of these things that we know that entrepreneurs need support in. But Doug, we are just about at time, so I want to thank you very much for presenting today and joining us. And I'd also like to thank everyone who is on the call. We also hope that you will join us on Thursday, March 3rd, for our next webinar, Marketing Strategies, Design Your Blueprint for Success. You can register for this event by going to bostonchamber.com and clicking on the Events tab. To get updates on these events and others under the Foundation's portfolio, please feel free to sign up for our small business newsletter, which you can also find at bostonchamber.com. And with that, thank you again, Doug, and we hope to see you all in the future. Take care.
Good luck to all of you.